Join the club of the richest 1%. By employing the strategies in this video, you can become rich and established and join the club of the richest 1%.
The knowledge and strategies in this video are rooted in Jacob Nayman's extensive experience, distilling more than a quarter of a century in his role as a leading investment and economic advisor to some of the world's wealthiest. Infusing your life with the financial strategies outlined in this video will enable you to achieve the most important goal of the 21st century: financial independence.
It is highly recommended that you invest your money using ETFs and not by investing in specific stocks. Investments in specific stocks/companies have no place in the construction and management of assets. Both beginner and experienced investors are advised not to try to invest in any particular company. If you invest in individual stocks, you expose yourself to high risk without the reward of higher returns. What is an index ETF? An exchange-traded fund, ETF, is a basket of securities that trades on an exchange just like a stock does. Typically, ETFs will track a particular index, sector, commodity, or other asset. With an index ETF, you as an investor gain exposure to numerous securities in a single transaction. The first ETF was the SPDR S&P 500 ETF, SPY, which tracks the S&P 500 index. How to choose the best ETFs. When you decide to buy an ETF in a specific sector, commodity, or index, you will find that there is more than one financial entity that manages such an ETF. So how do you know which ETF to choose from the list of ETFs? The golden rule is to choose the ETF from the 2 or 3 biggest ETFs in the investment product sought. For example, let's say you decided to purchase an ETF on gold, and there are at least 10 ETFs from different financial entities that can be purchased. The rule of thumb is to examine the 2 or 3 largest entities in terms of asset management scope, and to invest in the one with the lower management fees. The main points. If you invest in individual stocks, you expose yourself to high risk without the reward of higher returns. Choose the ETF from the 2 or 3 biggest ETFs in the investment product sought.
Is predicting your economic future a riddle wrapped in an enigma? Not quite. It's about creating it. Financial practices shared in the earlier segment, courtesy of financial expert Jacob Nayman, a toolkit for securing that future. But here's the catch. Knowledge isn't the ultimate prize. It's action that truly counts. The upcoming segment aims to spark that drive, that motivation within you to implement these strategies. So take note and remember, in the grand chessboard of finance, it's not the player who knows the most moves, but the one who actually makes them, who wins. This video contains valuable information. Use it.
Have you ever wondered what ETFs are and how they work? ETFs, exchange-traded funds, are investment funds traded on stock exchanges. Think of them as diverse portfolios containing assets like stocks, commodities, or bonds. These funds are traded close to their net asset value throughout the day. In essence, when you buy an ETF, you're purchasing a portion of a wide-ranging portfolio in a single transaction. Now you might be wondering, what makes ETFs so special? Stay tuned. So, why do investors love ETFs? ETFs are admired for their high liquidity, allowing for quick response to market changes. They offer broad market exposure, letting you invest across various sectors or commodities with a single purchase. They also provide short-term investment opportunities appealing to both individuals and institutions. Crucially, ETFs are tax efficient, potentially deferring capital gains tax until sold. With ETFs, diversifying your investment portfolio becomes simple and accessible. Impressive, isn't it? But how do ETFs work? Let's delve into how ETFs function. They're a unique way to invest in a broad portfolio via a single security. Rather than betting on one company, you're diversifying across multiple. It's akin to purchasing a piece of the whole market. ETF shares are traded at market price, not net asset value. Unlike mutual funds, ETFs can be transacted during the day, offering more flexibility. The variation in the market affects the ETF's shares, so if the bundled companies perform well, your investment grows, and vice versa. Now you know what ETFs are, their benefits, and how they work. Remember, knowledge is power in the world of investing. Before we wrap up, let's quickly recap the key points about ETFs. ETFs offer liquidity, flexibility, and broad market exposure, making them a popular investment choice. They track an index or a commodity and trade like a stock. ETFs can be a powerful tool in your investment arsenal. Keep exploring, keep learning, and keep investing smartly.